Today I wanted to come out and talk about some new insurance laws that have passed. One that says that if you're pulled over and you're uninsured, that your car will be instantly towed, your license suspended, and you'll be fined up to $300 before you can get the suspension lifted. I know there are quite a few of us out there who are uninsured, not underinsured, but completely uninsured. And if that is you, as of July 1st, what date are we on now?
July 11th.
Yeah. By grace, you haven't been pulled over yet. Starting July 1, you could have been pulled over and your car towed. We don't want to hear the stories of how to get it out. And if you've been to the DMV, you know that line is absolutely ridiculous if your license gets suspended.
And they're mean.
And they're mean.
Get to the back of the line.
Don't talk in line. Get that gum out your mouth.
So you don't want to be caught up with that crowd. So you may as well call me, Angela, for a minute.
Wait a minute. It's hot. My Mac running. Turn the air on. Ooh.
You just interrupted me.
I did. My Mac running. But go ahead. Go ahead.
Left.
Okay. What? At least it's hope. At least you have hope. Okay. I want to go back to this bank piece, this living benefits piece. So you telling me I'm investing monies in myself?
In yourself, yeah.
And I can borrow monies from myself.
Or just withdraw it. But if you withdraw it, it comes off your death benefit. So let's say you had $1 million policy and you borrow $200,000 or withdraw $200,000, then you only leave $800,000.
Wait, that's nice right there. So y'all not like universal life insurance, huh?
No.
My grandmama had a policy. She
Stop that.
policy. She paid on the 50 years.
Stop that.
50 years, and when she died, it was on $1,000.
Wait a minute.
I'm serious. That man used to come get money every week, every month. Her $16, and she had that policy for 45 years, and it was only worth $1,000.
Well, let me ask you this. How long do I have to be in this program to live in benefits to withdraw monies?
You could start withdrawing in the third year.
Okay.
But in the third year, you won't have as much accumulated, of course, at that point. But what happens is, the beauty of this, you aren't actually withdrawing your money. Your money is being held as collateral, and what you borrow is State Farm's money. So this is getting a little in-depth, but you've heard of interest. Well, this is compounded interest because you never touch your money. But multi-line discounts.
All right.
So if you have different lines of insurance with us, you get special rates. Because we really appreciate the business and want to keep you as customers. So the more business you have with us, the more we want to show our appreciation. So if you're a homeowner and you have your homeowner's insurance with us as well as your auto insurance, you get a 17% discount. You do.
Okay.
And if you're a renter, if you're renting an apartment, you know, your landlord's insurance only covers the structure. It doesn't cover any of your personal property inside. So all those TVs, computers, your clothes, all that stuff would not be covered under that insurance. So you have to have your own, and it's relatively inexpensive. But it's a coverage you definitely need to have, and you'll get a 10% discount for renter's insurance.
About it in the millennium, a young person would be looking into for longer term. Just say if they started at about 25 and paying into this insurance you're talking about, so about 35, 40, they want to do a business, or then they got a nice little nest egg right there. Start early.
Yeah, well,
into it.
I personally think it can be done for all ages, up to a point. Of course, my 75-year-old mom is looking into this. But when my son was born, I got a 10-pay. So when he was 10, I was finished paying for his life insurance. So for the rest of his life, he has a life insurance policy in place. So even for your babies, and the younger we are, the less expensive it is for us to get it. But you can get it the older you get. If you're 35, and then 10-pay, I just spoke of that one, but there's a 20-pay. There's 30-pay if you don't want, because of course it's going to be more expensive the less time you pay into it. But the younger you are, the cheaper it is. Of course, at State Farm, we're doing a discount double checks. And we want to make sure that you have the proper coverage.
Okay.
But you can choose your package almost. You can go in there and say, I only want liability. Right now, it's not feasible for me to have all of that. And when I get to a point where I can, I will. And that helps you to lower your rates. You can also look at your deductibles. A $500 deductible means you wouldn't only have to pay that if you had a wreck. However, you're going to have a higher premium. So your monthly bill will be a little higher. You could raise that to $1,000 and have a lower note and drive safer. We also have a Drive Safe and Save program where they put a little device on your car to monitor just how well you drive, and it makes you constantly get discounts.
Wait a minute. So hold on.
Well, it's like OnStar. So if you have OnStar,
It check your speed too?
it checks all of it. It checks all of it, but it's never supposed to make your rates increase, but only give you benefits for doing good driving.